Now today we continue our Idea of the Month partnership with Seeking Alpha, and joining us now is Seeking Alpha author and the founder of Hyperchange TV, Galileo Russell. Galileo, welcome back. Thanks for joining us.
Yeah, thanks for having me.
All right, so back in September, Tesla said it would make some 1,500 Model 3s. Of course, last week we saw that Tesla actually only ended up making 260 in the entire quarter. So we could call that a huge miss. Tesla shares reacted somewhat negatively, but given that that was a huge miss, it wasn't a huge deal. What do you think that says about Elon Musk's time frame of attempting to reach 20,000 cars made a month just by December?
Yeah, anytime Tesla puts out a target, I think it's really important to kind of take it with a grain of salt, because they sort of try and go, I would say, 200% when every other car company is moving at 100%, and maybe when it actually comes out at the end of the day, they've only moved 175%. So they're still moving really fast. They guided that they were trying to get all their suppliers to be on time in July 2017, so that happened. But as someone who's following the company for years, I was always kind of skeptical of the rollout, expected it to be a little bit slower. And I personally wouldn't get too worried about it until if maybe 1 or 2 quarters down the road, these production problems continue. But the other thing to remember is they're on kind of an exponential ramp. So even just a week or two delay in their production timeline could have moved the quarterly numbers a lot.
This isn't the first time that we've heard about production issues holding back the rollout of some of its vehicles. Is delivery targets something that investors pay such close attention to? What are the production issues this time around?
I wish I knew all the details. All they've really said in the production press release that they put out is that there was nothing major that was holding it up, just kind of things are going slower. So the company's not being too transparent. Usually they don't go into too many details until the quarterly conference call. So I'm personally waiting until then to really get deeper on the issue. And I think the other news that was interesting was that they delivered a record Model X and S cars during the quarter. So those are the cars they're producing now. It's at a record run rate. And I would have personally expected maybe even to see some cannibalization from the Model 3. But we haven't really seen that at all. So I think that's kind of a bright spot in the production number.
But in terms of the Model 3, I mean, Galileo, this car is so important to Tesla's future. This is the car that is going to bring Teslas and electric vehicles to the masses. Is there any chance that production delays such as this could end up alienating some of those consumers and give the legacy automakers a chance to actually catch up and pull some of those potential consumers?
If there's a significant delay from here, like another 6 months maybe, but there's 450,000 reservations on the books. Even if half those cancel, I don't think it's that big of an issue for end demand, and I think that's kind of an extreme case. No one's even seen the car in person, no one's test driven it yet, and this is the kind of demand we're seeing. So I think once they get this thing in the showrooms and really have production ironed out, demand won't be an issue at all. So that's why it's almost better from a longer term perspective to really see them, it's more important that they take their time with this and really get it right, so that when it does roll off the line, there's no issues, because I think demand is not going to be a problem, and they're going to be literally, it's only going to be about how fast they can build it.
Tesla, we know too, has a different retail model, right, than several of the big automakers. Helping it, hurting it? What would you grade it as?
Their biggest advantage by far. And I can't understand why another automaker is not investing heavily in this touch point with the consumer, because I think that is what sets Tesla apart. That's why I think they're exactly like Apple's model. George Blankenship, who designed Tesla's retail model, was actually the mastermind behind Apple's retail model as well. And what's going to be really fun is when the Model 3 comes out, they don't have to build new stores. They just put the car in the stores they already have. We're going to start seeing the unit economics of Tesla's entire business model get really exciting once the stores have a cheaper car to sell. So I think this is their biggest advantage. The reason why legacy car makers aren't doing this, I think, is because they have a weird relationship with their dealers and third-party kind of unions in that regard. And so they're in a catch-22 innovative dilemma. Tesla's building this direct relationship with consumers, stores all around the world. I think that's their biggest advantage, and a reason why the brand is so highly coveted.
Well, there's been a lot of talk, of course, about the Tesla Semi and that being delayed. But in terms of what you're talking about with Tesla's retail model, how do you anticipate Tesla will reach potential buyers of the semi truck? Because obviously that's not the same group of people that they're trying to build relationships with in terms of the vehicles.
Totally, and they're taking a much different approach with the semi truck. I was at the Tesla shareholder meeting in California a couple months ago, and they noted that they're already working with all the largest buyers of these Class 8 semi trucks to figure out the exact specifications they want. They're not trying to sell one at a time here. They're trying to either sell it to fleet operators who are going to buy a ton and operate them on a huge scale. So it's kind of just selling to 1 or 2 companies really is enough to move the needle, I would say. So the fact that they're working with those partners is pretty promising. And that's the biggest thing I'm looking for at the upcoming semi event. I know it keeps getting delayed, which is kind of frustrating for me too as a Tesla fan. But I'm really excited to see maybe they'll announce some partners like Amazon, Walmart, or FedEx of some of these large trucking operators.
That would be huge.
Yeah, that would be totally
I mean, that would
huge.
be. I don't anticipate that happening because it's such new technology. But I mean, would you be also satisfied with a smaller partnership too?
Yeah, like even I believe the CEO of Ryder came out, which is they operate like third party. You can rent a truck from them and operate it, and they're one of the largest in the world. And they already said they were talking to Tesla, and they even released the range of the vehicle at about 300 miles. Although we'll see if that comes to be true. But yeah, so maybe they're smaller name partners, but they did say they are working with partners. So I wouldn't be surprised to see something get announced when the semi-truck gets unveiled.
Even though you said you're a fan of Tesla, do you think the stock's overvalued?
On a very long-term basis, I think it's a very high-risk, high-reward play. I think the long-term game here is to build the autonomous taxi service and the autonomous freight network, and the financials and everything that they're doing now is kind of just a stepping stone to get to that next level of the business model. And so I think if you believe in that long-term vision, it does have a lot of potential.
But do you think that is priced in now? I mean, if you're an investor on the sidelines, do you think now is a good time to get into Tesla, assuming that there would be more growth or suspecting that there would be more growth in the stock, or do you think most of that growth is already priced in?
Well, I'm a Tesla shareholder, and I've been following the company for 5 years, so it's hard to pick and choose exactly what's a good entry point, but I think in the long term, they're disrupting, the self-mobility market of an autonomous taxi service could be a multi-trillion-dollar opportunity, and, their cars are going to be cleaner, safer, cheaper, more sustainable than ever, and this is why they're investing so much money to build to that future. And so I think if you believe in that, then buying in at a $60 billion valuation could make a lot of sense in 5 to 10 years. But if a recession hits, I wouldn't be surprised to see the stock take a big pullback. So
We don't have much time left, but I want to make sure to ask about Hyperchange TV and your Moonshot Mondays. You have a new video coming out today.
Yeah.
What is your Moonshot Monday?
Kind of goes more into depth on this and the Tesla thesis and what I think the company can do long term. I did a back of the napkin financial model through 2024 that kind of shows this transition from selling cars to operating autonomous taxi services, and kind of going more into depth on why there could be big upside even though the valuation is so high.
You're going to have to come back, Galileo, and grade where Tesla stands in the autonomous market, because we've heard different opinions on both sides. But
yeah,
thank you.
Definitely.
Yeah, thanks so much, Galileo. That's Galileo Russell, author at Seeking Alpha and founder of Hyperchange TV. For more information on Seeking Alpha's marketplace, visit seekingalpha.com/marketplace.